Good evening, guys. Hope you're having a wonderful day. So, we got two things shaping up on Bitcoin. All right. So, we got this falling wedge pattern. All right. Falling wedge pattern is actually a bullish pattern. So, let's look at it. All right. So, we got this wedge. We break out. Let me take you down so you can see some other ones. All right. See? Downtrend, breakout. This is what we're looking for. So, that's the other alternative. So I told you before, when we do our technical analysis, you got to do both, meaning that you need to have the alternative of the upside and downside. All right. So you see clearly we could see some form of maybe a break, retest, and as we stair step on up to the upside. Now, let's get to the nitty gritty. We got this what? We got a head and shoulders pattern still in play. All right, so we got left head, right shoulder. All right, we got this neckline. We did break the neckline right here. We broke it, but we did not close below. So that could be a good thing, could be bad. Here's what. Let me give you the alternatives. If we do break and come down to this area, if you got extra cash, great opportunity. You're gonna get some great discounts in the market. Very good discounts. So it's good on that sense. If you are impatient, no, it won't be good. But like I said, this would give it more power to go and just break some crazy records to the upside. But this is the level that we will have some form of completion, at least for this area. Now, if we violate this area, we're coming down into these zones down here, potentially around this 20K region, which would be intact because we did not what? We did not retest this area. So if we violate this, we definitely could see this. Okay. That's the worst case scenario. Most people would be out of the market at that point, and they would give up. Time after time, we show you on the chart how people give up, and it just didn't work out. All right. So we got that. What do we have here? We still had a head and shoulders pattern over here, right? It did not play out. All right. We wind up getting basically a triple bottom type ordeal, or some people call it inverted head and shoulders. I mean, inverted Bart Simpson pattern. All right. So this head and shoulders did not play out, and we created this. Could we be setting up for the same thing where we would have this sideways movement, just like right here? We may inch down. You see how so you see how right here we had a low right there. All right. So what is this? Around 29, and then we wind up dropping to 28. Went lower, right? So this right here really shook off a lot of shorts. All right. Uh, I'm sorry, longs. Longs. All right, longs got scared. Oh, we're going lower. Let me go. Let me switch. And then they got drug. You know, the longs got liquidated. The bulls got liquidated. All right, and then it goes back, and then a lot of them was probably confirming like, okay, we really going low now. This head and shoulders is going to do it. So guess what? Everybody went short. So the bears just loaded up, and then all of them got liquidated. Just massive orders, right? Could we be setting up for this? So what I would have to do is I have to go and look at the sentiment and order blocks. Go see how many people are actually going short. And if these order blocks are if it's too many shorts down here, we're probably not going to go. We're going to go up to the upside to shake them out. The reason why we're not going to see a lot of a downtrend, of course, this is a what is this? This is from April all the way down to July. So April, May, June, July. That's 3 months of downturn. In this market, that's very uh, that's not long. You got to remember, a bear market you can go 2 years worth of downtrend and sideways consolidation. So the good thing about this is that this is quick. Um, which means that because we're in a derivative market, meaning that someone else can take the other side of the trade and make money going up or down or sideways, I believe we're going to see more quick downtrends and quick uptrends, but not sustained. So what this does is this gives us a little better method of swing trading, which is not the same as day trading. So we may get more opportunities to start swinging, and then we can keep some of our positions intact. That it's just purely long term, but on the way up, we can make some profit. I know a lot of you probably figure like that you should have took something off the table. You probably should have, but don't worry. What you don't want to do is, which typically happens, is this. All right, so we had this right here, okay, and we had price come down, and then as soon as price came back, we basically created a double top. A little bit pierced it, but this is close enough. What this means is that the participants in the market, let's do this. All right, the participants in the market remember that last time I held, I did not sell. That's what they're thinking. So when price comes back to this area, I'm not risking it. I'm taking profit. And then what happens? People start taking profit and it dip. So then the market participants say, I'm smart. See, I knew it. I knew I should have. That's right. I did right. So guess what happens? You have the same people that get back up here. They may do it again. But right here, they didn't do it again. They did it what? Here. It got here, it dropped. It was confirmed. They were like, see, I knew I was smart to get out. And then it broke again. They might have second guessed themselves. They're like, man, I should have stayed a little longer, like it's gonna go higher. But then they came back down and it's like, yes, confirmed. What happens is although this can happen, but this is what you're gonna run into. This is that pattern back over in here in this area. Okay. Price went up here. It dropped. Oh my god! I'm like, oh my god! I should have just sold. I hated this drop. 71%. So guys, let's just theoretically say this was 100 grand somebody had in their in their account. They up 100 grand, and then it dropped 71%. So that means that they literally have $39,000 left. Is that right? Something like that. Yeah. So they watched $71,000 just evaporate. Did I say that right? 7, 8, 9, 10. No, not 39. 29. Yeah, 29. So they have $29,000 sitting in their account. They'll be upset. So what? So they're gonna hold on. But look what happens. It rallies and they get back to that point. What you think they're gonna do? Oh no, I'm getting that 100K. I'm taking it out. I'm done. I ain't messing with this thing. They take the profit, and then look what happens. So this is the daily chart. So they take it, and then what happens? It drops. It dropped a little bit. Let's stretch this out so we can see it all the way. Okay, all the way, all the way. All right. So let's see how much it dropped. So it got up here, hit that point again, and we dropped back right here. So that's 7%. That's a lot now. 7%. It's a lot. But they told themselves, I'm right. I did right. I knew it. I knew it was going to drop. As soon as I get back to that point, I'm glad I got my money. 100K, right? Watch this. What happened? Then they say, "Oh, it ain't gonna last long. It's gonna come back down. It's gonna come. It's gonna come." And then it never comes. It never came back. Just kept going, right? So watch this. 100K at this point will be worth over $307,000. At that point, let's do this. Make sure my math correct. Ah, yeah, I was right. I should be able to do this in my head, but whatever. Duh. Anyway, 369,000. Anyway, yeah. So making $100,000 is great. It's good. Um, they're kicking themselves now. They didn't stick to their plan. This is what's going to happen to many people. They remember this. Many of our members, especially when it comes to that voyage or whatever, they're gonna remember the price point. They're gonna be like, "Nah, I remember this. I'm not doing this no more. I'm getting that. And I'm gonna take my profit. I'm gonna be happy." And then it's gonna go on to do some serious numbers, and they're gonna be like, "Man, I should have just been patient. I really could have made some bank." So that's why we recommend you doing the tier strategy. Tier strategy will really allow you to benefit on some of these moves, and you can feel good that you can take something off the table and you can let something run. Back when Cardano did that run up in, I believe, May last year. What is this? May, August. Over here is this right? Yep, May right here. Went up to about 250. I was able to sell around $2.43 around there. And like I told you before, I was able to do 2 years worth of a salary by selling 7%. Also 7%. So you're right, well, 7%, man, that's not a lot. Well, that's a lot of a bigger number, but I did what? Oh, this is Coinbase. So let me go to a different one that has some longer data. So now you see that the data has changed drastically. Okay. Now look at this. You see all this flatlining? See all this? And that's not really flatline. If I really stretched it out, you see how it looks. See, this changes. See how this look? Yeah. But look at this. What's this? 3 cent, 2 cent, all in this area. I'm accumulating. I'm accumulating. You know, let's see if we can go over further. All right. So this is the furthest it goes as far as for this chart. But look at this. Accumulate, 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 building, building, building. What am I building? The tier strategy. Tier, tier, tier. I know that certain things sold when I did that 7%. That was just one of many tiers. I got almost 10 tiers on Cardano, and I only sold out of two. So what happened? I got one for the 20 the 7%, right? And then I did another one for I wanted to do something special for someone. So I got I just sold off a little small batch for that. But that's it. Now, every now and then I take staking rewards and I will roll it into another project. So I use it for that, but that's just staking rewards. That's not my actual principal. So that's another good thing with that. But look at that. 10 tiers, eight of them are left. Two have been used. Yeah. So how you treat those things when it's down, it makes a difference. All right, look, so we potentially got a double bottom right up here. We got a W pattern. So if anything, we at least can get back to this level right here. Cardano could go on a rip, um, at least smash to this particular level. So this possibly W pattern. What we got right now, we're coming back to market structure. This is all we're retesting right now. So we have this and that. And I believe tomorrow you're supposed to have the Sunday swap. It's supposed to go live, I believe. Let me go and check for you guys to make sure. Sunday swap. Still on the Sunday swap. Uh, Watch date down here. See what time. Yeah, Thursday, January 20th. I don't know the time though. Okay, so yeah. So keep an eye on that. You would think so. Look, Cardano rallied real good, but I knew it. It was a bull trap. All right, some people came off, and there's a lot of seller pressure right up here, so it attracted a lot of them. All right, they just got liquidated. So what I'm expecting that we come back, we retest this area, and then we're gonna go a little higher. I mean, if we don't get there for whatever reason on this first, sorry, on this first, I didn't mean to do that. If we don't break this, I mean, I think we're gonna break it, but when we break it, we got these next levels that are very key that you will have to look at. Let's see what type of percentage gain that is coming from here. That's not bad. Just to get back here, you're talking about a 23% gain. All right. Now, this is not trading advice, but there's a possibility that I could consider. I am down on certain positions. I wouldn't mind rolling in some of these into Cardano to try to take advantage of potentially what could happen. A 25% gain that'll make up more than some of these little losses I got. Like for instance, them down like 8% on one position, and that 8%, it's like two $2,500 worth of money that's down. So this is what will happen. I will go ahead and take the L. I will roll the rest over here, 25%. I would make back what I just took the L on, plus basically 2x that after that. So because 8%, so 8 times 3 is 24. This is 25%. I can make it back, and I get the credit too. What's the credit? I took a L, so that goes towards my loss total for the year of 2022. So I bank that as an L, and it creates a deficit. So that's good. And now let's say we get up to the next level. We're talking about 36%, which is good too. Now you have to ask yourself, what can move 36%? Um, in this market conditions and where we at right now. It might be a little difficult, but Cardano could do this in the next couple of days. You don't know, or hey, look, this thing can fake us all out and be like, psych, come up, do something like this, and then just start consolidating, and then finally going up here. Yeah, it could do something like that. These things are tricky. But I love day trading or swing trading crypto projects that I don't mind owning. I don't want to ever day trade something I don't mind owning. So that's one of the hacks. If it goes wrong, I mean, you can take an L if you want to, or you can say, you know what, I just hold on to it. That's the other alternative, which a lot of people do. They'll just hold on to it. The problem is, you just got too much capital tied up, and you can't do anything with it. So if you're a true day trader or swing trader, you really do stick to your losses, your stop loss criteria. You don't get married to it. You say, hey, if it's if it doesn't do what I think it's supposed to do in this amount of time, I'm out. Right. So yeah. So like I said, this is not trading advice. I was telling you what I'm looking at and what I can see. You can take that risk. So, so you. But that's all I got, guys. Not gonna keep you long. So make sure y'all subscribe, hit the like button, share it. Have a great one. Leave comments if you have any.